Welcome back to Fast Market. It's now time for our cash tag segment. I'm Alex Coffey alongside Kevin Hinks. Joining us here in studio is TD Ameritrade Network contributor Jenny Horn. And from LikeFolio.com, the co-founder Landon Swan is joining us as well. This is going to be a fun conversation, guys. Netflix earnings, we always get excited, as this to me is like the unofficial, kind of official start of tech earnings when you get the big names starting to come out. And Netflix, not the outperformer it once was here, Jenny. So I think there's a lot riding on this for investor sentiment.
Absolutely. And I mean, from a price standpoint, it hasn't really done anything this year. It's up about 6% year to date. And like you mentioned, sort of underperforming tech, which I like that you said it sort of kicks off, tech earnings, because I have to say that this is probably arguably one of the most watched names of this week. Now, it's been stuck sideways. I think it's showing a lot of signs of being a more mature company now. But of course, following their first quarter, all eyes will be on their subscriber growth. We saw pretty blowout earnings actually in their fourth quarter, which released back in January. And then last quarter, this stock sold off about 7% when subscribers came up short. Now, when really looking at this company, I think there's so many different things, and you have to, of course, consider their announcement last Wednesday when they said they'll actually be offering video games, and they just hired the former Facebook and EA gaming exec to sort of head this new department. Now, there's sort of a mixed bag here with analysts. Some are saying this should actually help boost its pricing power. They're increasing their services. They can potentially make your users pay a la carte or offer a higher subscription tier. But then some are saying, when the announcement came out, pricing was still very unclear, so this could potentially weigh on their free cash flow. So any guidance on that will be very important to so many investors. But what matters for this earnings report is really what the company did today. Wall Street wants to know what they earned today and what their profits are today. So I think that when looking at today and looking at subscribers over the last quarter, content is going to be so critical because, really what matters with Netflix in this super competitive market is how it's putting out content. Are its users happy with its Netflix branded content? And I think that's an area that it has to keep striving to continue growing at. And we know that Netflix historically has a very high cash burn in the content area. Now, many are saying that the areas it's underpenetrated are international or some smaller markets, so it does stand to grow there. But actually, our first tweeter of the day talks about the U.S. market being underpenetrated, which I thought was interesting because it seems like we'd have plenty of streaming services, at our fingertips. But our first tweet of the day says, streaming in the United States is still in the early innings with lots of room to grow. It's comprising only approximately 30% of television usage in the U.S. So I was shocked by this because I have to say that, again, it feels like there's so many different services out there now. And if this is actually completely true, that is interesting. And of course, then it would give Netflix potentially room to grow. But I typically think of Netflix sort of being the mature player in this space. So we'll have to wait and see if it's still able to grow at its same metrics, say, a year ago, which I just don't necessarily see possible given the pandemic. But our next tweeter sort of focuses on some of this price action we've actually seen this week, sort of with the broader market sell-off yesterday, which says, Netflix acting well today on Delta variant fear. My big concern remains their gaming announcement last week ahead of earnings. I'm always leery when companies drop good news shortly ahead of reporting their quarters, especially after having bad numbers in their prior quarter. So in full disclosure, their numbers actually really weren't that bad last quarter. I think they beat on both top and bottom line. It was just really subscriber growth that came up short. So Landon, I'm curious to see what your data has to say, because I actually feel like they were treated a little bit unfairly last quarter because they did have strong earnings and strong sales.
Yeah, I mean, top line revenue and earnings are extremely important. That's what drives share price. But people want to know about what those numbers are going to be in the future. And for a subscription-based company, it's all about how many new subscribers are you signing up, and of course, how many people are canceling. And one of the things that we see with Netflix, now before I get into this, I got to say, LikeFolio data focuses on English speaking only. So we are hitting the U.S. market. We've got really good insight into the U.S. market, not so much on international. But when you look at people talking about signing up for Netflix, it's a pretty ugly chart, frankly. I mean, it is very strong a few years ago, and it has been falling off over the last really few quarters. And I think it's getting down towards very low levels. I think it's negative. It's almost negative 50% year over year. It's actually down from 2019. And that is, that's that green line on this chart here. So again, This is not indicative of revenue or earnings. This is indicative of subscriber growth in the U.S. And I think that you can see there that, as the purchase intent started to fall, the subscriber growth in the U.S., that sort of acceleration or derivative number actually fell as well. And the stock prices stalled out. It's been really basically flat or kind of, it's been bouncing around, but basically flat since October, and up around 530 right now. I think it was 540 in October. So not doing well on the stock price, and I do think this is the more mature name. This is the leader in the space. This is the captain. This is the one that everybody's chasing. But I think, despite that first tweet about only 30% comes from streaming, which kind of blows my mind, I'm very curious what percentage of people or households have Netflix. They may not watch it as their only source, but I think most people, I think the U.S. is highly tapped out as far as Netflix goes. And the only way that they're going to gain more revenue is either by increasing prices or at doing some sort of premium services or add-ons. So concerned with subscriber growth in the U.S. and what we're seeing is that while streaming is growing across the board, Netflix is not the winner as far as growth goes. We're seeing that HBO Max and Fubo are doing extremely well. They're the gainers right now, and that's mostly because Fubo for sports, and then HBO Max has those theatrical releases. That's getting everyone excited right now.
All right, I have a lot to say here, so everyone sit down and relax. Jenny, the new mantra for the second half of this year and forward is video games and chill, Jenny, is what everyone's going to be doing. Because I want you guys to think about this. $176 billion gaming market is what they're about to enter into. And what will that lead to down the road? Higher subscription prices, right? Plus, I like now what they're doing. The second half of the year dump in terms of new content is getting every article I read is about all the new content coming out in the second half of the year. Not only that, you know what they're starting to do now that Disney makes a fortune off of is merchandising off their shows. That's another. So, Landon, what I'm saying to you is I think they're going to come out with earnings. And by the way, the expectations for new subscriber growth, 2 million, extremely low, so easily beatable in terms of consensus. Now, I think the story that Netflix is going to have coming out of this earnings play is the future with merchandising and with video games. I cannot believe that this stock reacted so poorly to that video gaming news. It shot up right away and then came crashing down when this is such a huge, enormous market that makes their pool bigger, not only in the US, but globally, and has the future ability for them to raise prices. So I get it that subscriber growth in the US is trailing off. That's almost natural. And, oh, by the way, from a stock trading perspective, stocks can correct two ways, right? They can sell off or they can flatten as their earnings get bigger. And so I think the latter is what's happening here to Netflix over the last several months. So, these dormant, really good companies that lay dormant for a while, they're destined to break out. And that's what I fear might be about to happen in Netflix, guys.
Landon, can I hang in here? Because I feel like that's a very optimistic way to look at this story. I think of it as video games, yeah, if they execute on that story very well, there's a lot to be taken. But I've been watching this space from a distance, and it seems like the same video games have been making waves for 20 years. Mm-hmm. It's Call of Duty, it's Madden NFL, it's NBA 2K. I think it's Mike Verdu from EA and Facebook that's joining us. I've never heard of a single Oculus game from Facebook. I've never heard of one. And so they might be doing okay, but I've never heard of them. And so unless they're going to come out with the next Fortnite that really shocked the gaming space, this could be a big flop and be a PR disaster for Netflix. On the other side, to your point, I just want to throw a couple more things out here and let you kind of sum things up. I see them as in a pickle because the only things they can do now to grow here in the U.S., outside the U.S. is a different story, and pricing over there is a different story as well, is throw ads on here or crack down on password sharing. And both of those things are going to disrupt happiness. Landon Swan, take it away.
You're completely right. Kevin, that was very optimistic, and I agree. This company has executed near flawlessly for over a decade now. So there's a lot of reasons to love the executive team and to have confidence and optimism in what they may do in the future. And Alex, you're right. They're sitting at 75% happiness, which was just a smidge behind Disney Plus and leads all streamers. So customers love Netflix. They've done a fantastic job. But when it comes to creating new revenue for the U.S., they've got to start thinking outside the box, and that's what they're doing. I think that this is a bit of a tell in that, they're saying we're a little bit tapped out on subscribers. If you haven't subscribed to Netflix by now, after what 2020 was, where everyone was locked in and you got to try streaming and all this stuff, we saw all kinds of demographics coming into the streaming space that you never would have thought would join, at least not for many years. I think everyone's joined. If you haven't by now, then what are you doing? So Netflix now has this problem where they've got to, like you said, crack down on password sharing, raise prices, or innovate outside the box. And the first things are going to lower happiness, which you can't do. It's going to be very, iffy. But then if you take a swing and possibly miss on video games, that could be a big disappointment for investors. So I agree with you, Alex, that it's a tough space to get into. Video games, there's a lot of competition, and streaming, there's a ton of competition with more and more coming all the time. So frankly, I think this is just a huge win for consumers. And for Netflix, it's going to be, a time to prove themselves. And if they can figure out a way to leverage what they've got, basically everyone in the U.S. knows who they are. If they can leverage that and turn that into more revenue, then, the sky's the limit for the stock. But I think that, just like Kevin talked about, the stock's been on pause and investors are saying, all right, what's next? Because U.S. is nearly tapped. Are you going to crush it internationally? Or are you going to get more money out of U.S. Customers? And I think that's what we're all waiting to see. If you only look at subscriber growth, this is going to be a bad report. Earnings score of LikeFolio, earnings score is -68. So, we're pretty pessimistic on this particular report. Long-term, love the company, love its position, but need to see if they can actually execute these sort of blue ocean thinking that they're taking on.
Okay, so Landon, I usually take the more optimistic outlook like Kevin was, and I did see Bridgerton was on the news last night, so I have to think that's good branding for Netflix, but I think I represent a lot of what you're talking about, where I don't want to watch Netflix anymore because I just did it for a year and a half. So I'm get me out of my home. So I can't watch any more TV. So I'm wondering if this is an industry-wide headwind, though. If this is weighing on Disney Plus, HBO Max. I know you said that HBO Max and Fubo, which shocks me, are doing very well, but I have to sort of think that in general, people are just streaming less right now.
Yeah, so streaming is up year over year, but it's actually for some of these specific companies like Disney Plus and Hulu, they're actually down. The new subscriber growth, those are down along with Netflix. ESPN's pretty flat. HBO Max is doing well with the theatrical releases. A lot of talk about Space Jam. And then Fubo with the live sports streaming is doing well also. So I think that in general, I believe you're right. There's a sentiment out there of, you know what, I've done this for a year. I've watched a lot of stuff. I've subscribed to all the things. And now the weather's nice across the country. Let's go out and enjoy life instead of watching at a glowing screen. So I agree with you. I want to see how they execute. Overall, Netflix is a fantastic company. Content-wise, they kill it, but so do a lot of other companies, and that competition is just getting stiffer and stiffer. And so we'll see how they do, and hopefully, they can do really well. I'm a little bit, I'm not convinced on the video gaming side. We'll see how they do, but I'm just not convinced. I'm a little bit more with Alex on that one.
Landon, we'll leave it there. I think it's a good setup here for whatever happens. I think a big part of this story, obviously, is outside the U.S. too. So a lot of unknowns here, but I think it's going to be a crucial report for Netflix investors. Absolutely. Landon Swan, the co-founder of LikeFolio.com. Thanks as always.